it's an interesting dynamic because a lot of European issuers are looking out here and saying, wow, you know, the private money space is really attractive. We can move a lot of product. But underneath that, you know, to what degree are our private clients actually holding? To what degree are they, you know, putting pressure on to get a favorable yield at issue and then flip it into the secondary market? So I think the private money will be here to stay as long as the equity markets are muted and as long as the issuers keep that premium in the pricing. We've seen a couple of issuances in the high yield space recently where the whisper numbers were, you know, in the sixes, and the issuer came out, you know, in the fives, and that just killed the issuance in the secondary market. So I think the private money is an interesting dynamic because people are coming to it first, but to what degree is it a real quality institutional type flow, and to what degree can you manage the pricing risk? So you get a diverse investor base, which is great. But on the other hand, you may get a little bit pressured on the issue price. Leverage is incredibly important for them. The way it's played out in the last year or more, it's basically equity-like returns in bond product, which, you know, takes a bit to get your head around. But when you see the numbers, you know, Aviva did a launch recently. It's trading at 107. ABN did a launch. It's trading at 105, 106. And people who held for 2-3 months flipped it and made 100% or more annualized. So it's leverage is incredibly important. And I would say when we go and publish information on a new issue for clients, if we don't put the loan value in there, that's the first thing that they'll call and find out. So I think Ben made the point about unrated issues, which also goes into the high yield space. A lot of those, it's harder for clients to get lending value against. So that does determine how much private money goes into